Good afternoon. My name is Eddie C, and I'm the author of Trend is Trend. The date today is 27th of October 2022. It is a Thursday, and the time is 2:07 p.m. Welcome to Buy Rationale. Buy Rationale provides 15 reasons when considering a particular stock. A disclaimer here though. The sharing here is basically for information and education. Should you decide to intend to buy a particular stock, then you should consult your financial planner or your broker. The stock in question today is CYL, stock code 7157. Okay, this stock is picked based on the criteria of price gain, uptrend momentum, above the cloud, Ichimoku cloud, above MA 200 with relative volume greater than 1, and is a profitable net cash company. Okay, now if you look at the screen here, two stocks actually triggered today, CYL and HIL. Well, CYL is an industrial product company. Basically, it's doing packaging. HIL, I did not pick it last night, so I choose CYL as the as the stock that triggered today, with a volume done of 30,516 lot. Well, quite good. Okay, let's take a look at the fundamental. Let me shift this to the right so it's easier to see. As usual, our fundamental, we will calculate the enterprise value divided by total common share outstanding, which will give us the intrinsic value of CYL. So enterprise value is 39973 divided by 100 million shares. It gives us a intrinsic value of 40 cent, 3.999. I take it as 40 cent. And what's the price it's doing now? After the market close for the first session, is doing 73 cent. Okay, so if we take the 40 cent minus the 70 73 cent minus 7.73, it means we are actually paying a 33 cent premium for the current market price against the intrinsic value. In terms of percentage, we take 33 divided by 0.73, or you are paying a 45% premium. Okay, all right. The second rationale we look at is CYL actually has an operating margin of 1.87%. Today we are using a new rationale for the indicator because we will be using operating earning yield. What it means is that the operating margin generated by CYL must cater for two things. One is to cater for the capital gains over its market price, like what we are paying for a premium of 45%. So we need to justify if the operating margin will be able to cover first the capital gain aspect of the price. Okay. Now, operating earning yield is 2.88%, which is good. But will this 2.88% be able to first pay the increase incremental aspect of the market price, which is 73 cent? Yes, it does, because operating yield actually uses the operating margin divided by the market cap, and still, after covering the current market price, still yield a 2.88%. Meaning this 2.88% will be able to reduce the PE ratio of 27.8 or 28, okay, going forward. So a positive future earning yield will reduce despite the fact that the PE ratio of 28 is rather high, but the prospect of the future forward, because of the positive operating yield percentage, we will see the PE ratio being reduced. Uh, the 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 more preferred valuation I normally use is actually the acquirer's multiple. Uh, that means I use the enterprise value divided by the EBITDA, which is also the earning before income, before interest, tax, depreciation, and amortization, which is good, 9.9 or 10. And it indicates that the current value at 73 cents is actually quite a fair market value. Okay, the other good thing is uh, CYL pays a dividend yield of 2.13%. So for those of you who are dependent on income stream, and having cash to tie over your retirement like me, uh, will be happy to note that CYL actually records a 2.13 dividend yield. It is positive cash flow based on trailing 12 months. It has a free cash flow of 1.92 million, and that means that for future expansion, CYL will face no problem. On the net debt, it is a negative 7 million and above. So that means CYL is a net cash company. It has a small doubtful account or bad debt of negative 48 K, 48,000, 48.3 thousand. Okay. Uh, Then it has a Petrosky score, meaning this is actually the performance delivery score. Normally, a 6 score will qualify based on my taking, but CYL is doing a 7. So that means uh, it is either a reversal on the a reversal going up on the company, delivering better profitability. Or you may even consider to call the Poitrowski F score as the profitability score. All right. Then the Z score, the Altman Z score. Actually, Altman Z score considers if within 2 years the company may have the probability of going bankrupt. Uh, 2.5 qualifies for the company, but CYL has 3.55. So it looks like CYL will not face bankruptcy in the coming 2 years. It is a sturdy and safe company. The Binary score, M score, measures if the accounts have been manipulated. All right. Okay, normally a very strict and firm score will be minus 2.5. CYL scores 2.3. So, okay, I will forgive it for zero point 0.2 score. So, overall, you can see fundamentally that CYL is uh, investment grade stock, fundamentally good company. Okay, if we look further on the income statement, we can see profit margin in the orange color line. It is ascending since 2018, which is a good sign, and a payout excuse me, a payout ratio of its dividend of close to 20%. All right. On the balance sheet side, we can see the debt to asset in the white line or gray line. We can see that against the total asset and liability, the net to asset is also coming down, meaning the company is being managed on less and less debt. And on the cash flow basis, the orange line, which is the cash flow from operating, is above the rest. Between above the rest means the investing source and the financing source. So it notes that the company is uh, more dependent on the cash flow from operations, which is the actual business of the company, meaning it's like packaging material. Now let's take a look at the technical charting. Okay, it's going to be quite fast and simple. First, we look for trend. There are two higher lows, so it is confirmed CYL in the short run has a trend forming, uh, and it looks like it is going to form a pennant here. Okay, it has just broken the pennant, indicating that it is the price action is uh, going upwards. All right. So, is there a momentum? Uh, for as long as the price candlestick is above the cloud, the Ichimoku cloud, and is above the 23 MA233 line and the MA2 to 155 line, uh, it is indicative of momentum, and it is confirmed by the breakout of the pennant. However, for me, if I'm to buy, I would prefer for the price action to break the squeeze breakout. So the strategy I will use to buy in is based on the squeeze breakout of the pennant, and the squeeze breakout will be at 77 cent. 77 cent. Okay, 77 cent. Okay. Uh, then if you buy the CYL at 77 cent with a price target of $1.27 and a cut loss at 57 cent, and if the transaction you undertake favors you with the price going up achieving its target at $1.27, you will have a reward to risk ratio of 2.4 times, which is as I said, our condition is always a risk reward of at least two times. In this case, 2.4 times, a good return for your investment. Okay, then we can also see that actually CYL is actually riding the Elio wave 2 going up to the apex of 3. So from here, you can see that you will still have a good range of the ascending price to reach the target. All right, wave 3, which is good. And Last but not least, we can see a bias intact situation occurring here with incremental volume. A bias intact means that the buyers are in control. So, given you the fundamental, the statement plus the technical, what do you think? Is it consider a good buy for you? All right. So I wish you a happy trading for today. Looking at CYL, and if you think that whatever information I give to you is significant and educational, please like, share, and subscribe. And just to let you know that if you subscribe to my YouTube channel by Rationale, you get to join the TIFIC Investing Club for free. All right. So have a good day. Goodbye and bye bye.